Hello, traders. If you saw my live stream this morning, you know a little bit about what happened. During all of this, last night's consolidation, I was like, wow, I couldn't believe it held that tight little range all freaking night. So, somewhere around here, yeah, we opened at 6. This looks like a 1 hour. We opened at 6, we pushed down, we took out the low here. Didn't quite take out that low. Then we came out and we took out the high. I got involved somewhere around this area, expecting it to take that low, or at least the low of the day. This candle right here finally got me out of the trade and finally got me funded for the second time. I mean, that account was already past 53,000, but if you watch that other video I made, the dashboard did not register $2,000 worth of my trades. Okay, so let's go to the 1 minute. Let's see if we can find a reversal pattern here today. I like the very first one of the day. I'm going to put regular trading hours only. If you were to catch that one, you would have been great all day. So we opened with a little bit of a gap up and we came down and we filled it. Okay, so this candle right here filled the gap. That's the one I'm calling the breaker. You would have had to have gotten involved real early in the day, but if you did it, you'd have been pretty good. I did not do it. So I've noticed this a lot. If you go back to the opens on days where we go up or down, we open here, push down, filled the gap, and then we went up and we ran the high of the day right here. Boom, that one, we ran the high of the day. It did not take pre-market high, and that's why I didn't get involved, because it left pre-market high by a tick or two. But then we push down, we go below all of this, came back, and we respected this guy. Pulled away with a fair value gap. This is our very first fair value gap of the day. So we can mark it out. And if you were watching the live stream, I was mentioning that. That's the first fair value gap. I even had it typed into there. First fair value gap. And we respected that sucker. Every single time it went to it, we respected it. So if you were to get involved somewhere around this fair value gap and just go short and aim for something below, what ended up being the draw was these two relative equal lows from previous day. They were 4-hour lows. One of them was here, one of them was there. On a 4-hour chart, those lines are better. Or you could even aim for the new week opening gap. But let's say you didn't get involved in this one. I was looking at, okay, we took out the pre-market low. Maybe we'll go higher. And I think I took a trade right here. And we only wanted that liquidity, and then I got spanked. But when I got spanked, that was information I needed. As soon as this breaker invalidated, an invalidated breaker is just as good of a signal as a breaker that is validated to the upside. This right here, this run up, when we came back down to it, I thought, okay, we're going this time. We're going. And we didn't even take the high. And when this became invalidated, I got short right here in this fair value gap. And I caught this beautiful run down. I caught every single tick all the way down to 800. Right there, 800. That's where I had my take profit. I caught all of that, and I made all my money back. Plus, it was a $2,500 turnaround. It was sweet. Loved it. But then I started thinking, well, we took the lower liquidity. We're going to reverse back to the upside. Took a long here. I was expecting to go way up here. Lost. Loser. And I was adding to. So lost a bunch there. Then I decided, oh, we're going to go down here and take this low. And so after we started trading back down, invalidated the breaker. I went short. It took that low and then zipped right back up. And I was still holding, but I'm trading two of these minis at this time. So I'm up for the day. It was a $2,500 turnaround, but I was up 1,800. This took about, I don't know, 300 or 400. This one took another 500 or 600. And then I'm down. I've only got like $200 on the day. And I decided I'm not falling for that crap anymore. And I think I may have sold this one short, expecting it to go to the low. And you can see what happened. And so I ended the day in the hole when I should have ended the day in a positive. When you catch a run like that, stop. Just stop. You can occasionally catch a run back up. A lot of times you can. My expectation was, and I remember trading a day like this, it was in the past, like we're talking maybe 6-8 months ago, where I was taking trades and expecting them to take these highs. Like every time it ran up, today I expected it to take that high. And it didn't. But I was expecting it. And I remember the day that I traded, it did that all the time. And then finally, MOC, it finally took those highs. It went back to the end dog and then kind of pulled back. But this is what I call the money stealing zone. Anybody that made money on the way down, if you didn't stop trading, you gave it back in this little mess right here. Because these are big swings. You don't think it's that big of a swing, but 40, 50-point swings are enough to clean out your account. I've gotten better. Used to, on a directional day like this, I didn't know where to get in and I would lose money the whole time. I've gotten better. If you watch my live stream, you saw that I put an order here. Let's see, this one, it poked it and went straight back up. And that's a big swing. That's nothing. That's a 40-point swing back to the upside, giving the impression that we're going to the moon because we just poked the lows. I think I lost money on that thing too. But on a directional day when it's clear, it's after lunch, we've made no attempt to go higher. That's saying directional day. That is buy the run up or sell the run up. So when we ran it up here, I was actually in a long and I was saying, you know what? I'm not convinced we're going long. I'm just not convinced. And this one, when it did not take the high, I may have gotten short there, but I went ahead and rocked it all the way back down to this guy. I got out at the end dog and then end wog rather, and then I got back in for the last push. It was a nice trade. But can you use a reversal signal? Nothing but that one. And then the first presentation fair value gap there. This one down here, you can use a reversal signal. But after seeing so many fail, would you? I wouldn't. I shut it down and I was like, I admit defeat. I am leaving. So this, I'm going to get rid of these relative equal lows here. They were obviously the draw. This is our last push to the bottom here. If we go to a 15-second candle, we might be able to find a breaker lower down that this thing was responding to, but probably not. This ended up being liquidity down here. So that would be our breaker on a 15-second chart. Not that much different than the one on the 1-minute chart. Let's just mark it, and we'll see if price reacted to it any better than it did the 1 minute. So it's about the same, really. The 1 minute is actually way up here. Now you could erase this being the lowest low and say when this one ran liquidity, this would be our breaker. You could say that. But still, I mean, it's just a choppy mess. Very, very choppy mess. So anytime we run a 4-hour low and then we get into this choppy mess, that's not a clean reversal pattern. I'm not going to be trading it anymore. Well, I hope I'm not. Some days I get very like this one here. You may try it. I would try that one for sure because at that point you don't know it's going to be a mess. I would try that one and hopefully get out at least break even. And but it just took those highs and then started on the way back down. But that one is a good trade to take. But you'd have to use a 15-second breaker. Otherwise, their breaker's way up here. So you would have to use a 15-second breaker there. So it's just not clean, not pretty. If you use the 1 minute breaker, you would have never gotten in this trade because that's our lowest point. That's our breaker. You didn't have a push above the breaker until right here. So you would have not been trading anything all the way through here if you were to use a 1 minute breaker there. I was using a smaller breaker and oh man, I clicked way too many times. Didn't do well. All right, so how could you trade this? That's what I always wonder. I've gotten better at directional days, but when this happens, I always try to trade it the same way with the breakers and all of that. So I would either be sitting here watching price move, or I have to walk away, lock my account, which is what I should have done, or I have to figure out a way to trade this where I don't lose all my money. And I was thinking, the low never got taken again. I thought it was going to get taken, but it never did. So any long with this is your stop in this environment when you've seen it come down, take a low, go straight back up, come down, take a low, go straight back up. When you're seeing that pattern, you could get in down here at one of the lows, put a limit order down here at one of the lows, and just take scalps. You don't have to play the entire range. How low did that one get? 84. And that one's at 89. So that's your biggest drawdown you would have taken was 5 points. Now there is always the chance that it could push through these lows. And if it does, you lose one trade. You lose one trade. Okay, it pushed through the lows. I lost that. But trying to get in on a reversal pattern every single time one appears, which really it didn't. If this is our line of demarcation, we didn't get one till right there, and we came back to the breaker. So we really did not get a reversal pattern here at all. I should not have taken a single trade in here, but I took multiple trades and I wrote it in all of my profit for the day. Okay, so looking at it in hindsight, how could I have traded that better? Because I've seen this pattern. I've seen it happen before. Identical to this. Using these lows as an entry point for a high. Because you never know how high it's going to go. Any one of these could have shot straight back up. But clearly a bottom has been defined. Even getting in at 800 would have been fine. You would have taken a little heat. That one would have got you down 15 points. But even getting in at 800 on a long with an expected push back to 20, that's 20 points a pop. I don't know. Maybe next time, if my mind is working properly, we could do that. On this one, bottom of the fair value gap, one entry, stop goes above the fair value gap, and you just hold on tight. It would have been hard to hold. Above the candle that started the fair value gap, it's a 17-point stop. Let me show you that. You would have had to have been real patient. So this is our fair value gap. If you're entering at a fair value gap, your stop needs to go above the candle that created it. So right here is the candle that created it. There's the top of it. There's the bottom of it. That's 22 points, but your entry would have been right here at the bottom of it. 18.5-point stop. This candle would have filled you. These would have made you sweat. That one would have made you sweat again because they're all coming straight back to your entry. If you had the cojones to hold it through all of that, you would have been golden all the way down to those relative equal lows. That's it. Not much of a reversal pattern today. Only that one. Directional days are like that. It'll make you believe we're having a reversal pattern, but you'll get spanked. Only time you should look for one is when 4-hour lows are taken. And if I would have only marked that as my breaker, I would have not have taken another trade today. So I'm going to keep that in mind and quit trying to look for 15-second breakers. Thanks for watching. Talk to y'all again tomorrow.